We need to do something for the middle and lower income people in this country to give them some relief from this ridiculous tax system that we have. Now, I said we would take away all of the deductions and exemptions in return for the $50,000 exemption. You say, well, geez, wow, I'm going to live without my mortgage, my interest tax deduction? Listen, I've looked at my own paycheck, I've looked at my own tax situation, and I know I'm better off with that $50,000 exemption. If I'm a school teacher, a fireman, a policeman, a member of the military, a blue-collar worker, if I'm anybody that makes $75,000 a year or less, I'm dramatically better off with this system. And who makes $75,000 a year or less? Only 10% of all taxpayers pay 75% of all the taxes. The vast majority of Americans will earn less than $75,000 a year as an individual and less than $100,000 a year as a household. So this tax system would benefit all of them tremendously. And it would be fair. We would remove this adversarial relationship that the federal government and particularly the IRS, I mean, I know people who just cannot stand the initials IRS, almost spit on the ground when they say it, would remove this adversarial system. And yet, the system that we're espousing will bring in as much or more tax revenue as we are receiving today. And you say, well, how can that possibly be, given the numbers that we've just discussed? All right, well, first of all, remember, the top 10% of all income earners pay 75% of the taxes. So we have that going for us from the very beginning. The second thing to remember is that those top 10% of all earners get a significant amount of their income in the form of interest, dividends, and capital gains, which are taxed typically at a dramatically lower level, and they use tax loopholes to shelter that money from taxation. So now they have a 25% across-the-board tax on everything above the exemption. Their average tax rate today is about 24%. So they're paying 1% more, and they're not sheltering from taxation so much income because they don't have any other loopholes. They're going to pay more in taxes. Now, I know everybody says, okay, we're soaking the rich again. The rich pay so much money. We're soaking the rich again. Yes, we are. But it's the same system for everybody. Everybody is operating under the same system, under the same set of rules. It's fair. And by the way, anything that is not income today would not be income under the new system. And you say, well, what am I talking about? How about, we're talking about the interest on municipal bonds, something that the very wealthy will invest in. It's not income today, and it wouldn't be income under the new system. The income from a Roth IRA is not income today, and it would not be income under the new system. But certain other capital gains, which the rich are able to avoid taxation on, that would be income. So the rich will pay a significant amount more than they are paying today. That's why I argue that this system will bring in more money than it is bringing in today. First of all, President John F. Kennedy cut the tax rates significantly. When he came into office, the highest potential tax rate potentially was 90%. And he cut it significantly, and the economy blossomed immediately because of it. Then Reagan cut taxes again, and the economy blossomed. Then Clinton cut taxes and Bush cut taxes. In every single case, the economy blossomed. And individual taxpayers did better because they had less money taken out of their paychecks. So we've had 4 recent examples of this. Now, we've had plenty of examples where the American public rebelled against taxes, the most notable of which was the so-called Whiskey Rebellion, which George Washington himself put down with an army who went to Pennsylvania. These guys were making whiskey and selling it and not paying any taxes on it. And the government said, hey, I want you to pay these taxes. And they said, no way. We didn't fight the Revolutionary War just to pay you taxes. Well, he had to take an army in there and put this rebellion down. And there was never really a serious battle. They just showed up and said, you will pay the taxes. And they said, okay. But there have been several tax revolts throughout American history, not the least of which we all know about the so-called rum runners, the bootleggers of the Mid-South, who would fix up their cars to carry bootleg whiskey, White Lightning, and outrun the cops and sell it for $1 a jar or whatever. There are people doing that even today to evade taxes. So I don't think we're ever going to get to a situation where the American population and other populations are, everybody's universally paying their taxes like they're supposed to. But we can have a more fair system. Now, another advantage of the system that we're espousing here today is that you'll have a lot less tax evasion. You'll have a lot less interaction with the public, with the IRS in an adversarial way. Because I can fill my taxes out on one page or even on a postcard and send it in. I don't have to get into a fight with the IRS over how much taxes I owe. And I don't have an IRS agent calling me at work saying, hey, you owe $10,000. How are you? We're going to eliminate that. And we could shrink the IRS department significantly by doing so. That's a little tiny efficiency in government that would be nice to have. And by the way, I wouldn't even stop there. What I'm about to talk about now is the most controversial of my ideas on common sense tax reform, and one that a lot of people will find very hard to accept. But I believe we should eliminate entirely the corporate income tax. And you say, whoa, that's a big step. Well, think about it. Who pays corporate income taxes? Well, it's not the corporations. Corporations are pass-through entities, and they pass those taxes through, first and foremost, to their customers in the form of higher prices on goods and services. Now, that makes the corporate income tax an extraordinarily inflationary tax, in that everybody else is paying higher prices for the corporation to pay its income taxes. Now, to the extent they don't pass those through in the form of higher prices to their customers, they're passing it through to the employees in the form of lower wages. And to the extent they don't do that, they're passing it through to their shareholders and bondholders in the form of lower dividends, lower interest, and lower capital gains on the stock. Now, those dividends, interest, and capital gains on the stock that do come through to the shareholders and bondholders are taxed again at their individual level. This is why we say the corporate tax is double taxation on the American taxpayer. Doubled. So you're paying twice. You pay once as an individual, but you're also paying at the corporate level because you're paying that tax too when it comes to you. You're paying twice. And it's a very inflationary tax. Now, the corporate tax payer is all of us. 72% of all public companies are owned by 401ks, IRAs, insurance companies that have invested on behalf of their insureds, various other investment entities, That's us. We're the ones that own those 401ks, those IRAs, those Roth IRAs, those insurance policies. Now, the 28% that are not owned by those people that is owned by the employees of the corporations themselves. A lot of them are top executives, but there are plenty of employees that own stock in the company that they work for. So the corporations are owned by you and me, and we're getting taxed at 2, 3, and 4 different levels for the corporate income tax. And there was never a more egregious tax on productivity than the corporate income tax. Now, we recently, 4 or 5 years ago, maybe more now, I can't remember, we cut our corporate income tax, which was then the highest in the world. We more than cut it in half. And a tremendous amount of corporate activity that had moved overseas came back to the United States. Our very high corporate income taxes had driven that corporate activity overseas, away from the United States, sending all those jobs overseas, costing us, the American economy, all those jobs and all the benefits of those jobs to the American economy. So when we cut the corporate tax rate, a whole lot of that flowed back. Now, if we eliminate the corporate tax rate, we're going to have a huge influx of corporate operations and jobs coming back to the United States. We'll also have small businesses, and most corporations are small businesses, by the way, accumulating more money that they're no longer paying in corporate taxes. They're accumulating that money and they're using it to expand their businesses, to buy more equipment, open new offices, hiring more employees. This is extraordinarily beneficial for the economy. All of these things are tremendously beneficial for the economy, and they make our economy bigger, stronger, more robust, more resilient. The corporate income tax is about as dumb a tax as we can come up with. Clearly, we cannot go on borrowing $2 trillion a year, adding to the national debt $2 trillion a year on an economy that's only about $27 trillion in size. We can't do that. Somehow we've got to raise more revenue and cut expenses to bridge this $2 trillion a year gap in our budget spending and our revenues. Well, the best way for us to raise additional revenue, and we're going to spend an entire episode talking about the budget deficit and all of the things we can do to deal with that. But one of the things we have to do is to find ways to raise more revenue, and there are a lot of them, but one of the best ways is to enact a consumption tax. Now, this is a tax on the things that we buy as citizens and taxpayers. We buy all kinds of stuff every day throughout the year, and we could enact a consumption tax. But it must not be a regressive tax in that it should not fall on the middle class or the poor. It should fall only on the rich. Therefore, I recommend that it be a tax on luxury items only. And it should be a voluntary tax. It should be a tax that the taxpayer decides, I'm going to buy this and pay the tax, or I'm not going to buy this and I'm going to avoid the tax. The beauty of this tax is that if you don't want to pay it, you can avoid it. And that's the way all taxes should be. And we are no longer in conflict with the federal government on this tax. It's completely voluntary. Now you say, well, what's a luxury item? Consider, if you would, a frozen pizza you buy in the grocery store. If you buy that frozen pizza, I consider that a luxury item. But if you instead bought all of the ingredients to make a pizza at home, none of those are luxury items. They're all staples. They're all essentials. And none of that would be taxed. Let's say you need medical services. You have a medical condition. That's essential. That wouldn't be taxed. Dental services wouldn't be taxed. Prescription drugs would not be taxed. Meats, vegetables, dairy products, cooking oils, flour, anything that you cook with at home would not be taxed. Fruits and vegetables would not be taxed. Beer, wine, spirits, absolutely, that's going to get taxed. That's a luxury item. You buy a new car. Above some amount of money, a new car is a luxury. What amount of money? Well, the average new car today, it'll be more next year, but the average new car today costs about $48,000. Let's just say that the first $50,000 you spend on a new car is exempt, on a new or used car. Nobody is saying you can't buy a Rolls Royce if you want one, but the amount you spend on that car above the exempt amount, let's say it's $50,000 for the purpose of this discussion, there's a 1% tax on that. I propose a 1% tax on the luxury items, and over 10 years, growing that to 10%. Now that tax would get collected just like sales taxes are collected today. We'd give the state tax collection authorities a little sliver for their trouble in collecting the tax, and the revenue would flow in. Now let's say you buy a second home on the beach. All right, a second home, that's a luxury item. Let's say you buy a brand new bass boat. Well, that's a luxury item. Let's say you buy a truck for your business. Well, above $50,000, that's a luxury item. Let's say you send your kids to college. That is not a luxury item. Let's say you buy a house and it's $1 million home. I would argue the exemption for buying a house should be a pretty high number, because in some of these communities, homes are very expensive. Let's say it's $1.5 million. We could argue what that exemption should be. But if I pay $2 million for a home and the exemption is $1.5 million, I would pay 1% of that $500,000 above the exemption, 1%. Now in 10 years, that's 10%. But we phase this in over 10 years so that people are not postponing purchases, so that people are going ahead with their daily activities and they're not considering, well, am I going to pay this tax or not? We phase it in over 10 years. Now, that's not the only thing we can do to address our deficit spending and increase the revenues of the federal government. The federal government must have revenues. It is essential to us. It protects our lives. It creates the ability for us to pursue the American dream, however you and I might define that for ourselves. It protects our individual liberty. The government must be funded, but we've got to have common sense ways to do that is not destructive for us. And I think that we've discussed several common sense approaches to tax reform that make a lot more sense than the things that we're doing now that we've gotten to largely by accident. I really appreciate your spending this part of your day with me to discuss common sense tax reform. I hope you'll join us next time when we talk about common sense ways that we can enhance our economy, which is critical to our national and our individual goals and objectives. I hope you'll join us then for what will be our 4th episode of Common Sense for America. God bless you and God bless America.